Assalamualaikum. We are from Group 5J AC22078 and we will be presenting on the case study of ESP Audit Committee Charter. Before we start, let me introduce our group member. My name is Puteri Nurul Izzah Azrin and we have Aimi Zulfa, Atika Ayuni Aiman, Nur Anissa, Nurul Aini Natasha and Sharifah Farah Ashid.
The case study document is created under the code name the ESP Audit Committee Charter, and it gives data regarding the role, responsibility, and authority of the Audit Committee of a fictional company by the name ESP. It was made with aim of being used in academics within the education program of the Institute of the Internal Auditors (IIA). The charter helps the committee with managing internal control, risk management, financial reporting, and audit. It contains the architecture of the committee, the frequency of meeting, as well as the special tasks of the committee. Through this case, we may measure the extent to which the charter fits with internal audit frameworks or standards such as IPPF and propose any improvement as per the best practice.
The first issue that arises in this audit charter is conflict in fee management of external public accountant. The evidence shows an excerpt from the ESP Audit Committee Charter on page 3 under specific duties, which stated that the external public accountant's fees are to be managed by the Chief Audit Executive and summarized for committee review and approval. A major concern arising from this ESP Audit Charter is the potential conflict of interest created by allowing the Chief Audit Executive to manage the fees of the external public accountant. The CAE is tasked with overseeing the internal audit function, which serves as a fundamental component of the organization's internal control system. At the same time, the external public accountant is responsible for providing an independent opinion on the financial statements, which includes evaluating the effectiveness of internal controls. If the CAE, who is part of the management structure, is given authority over the external public accountant's remuneration, it creates both the perception and the risk of compromised independence. Since both internal auditors and external public accountants assess similar areas, particularly internal controls and risk management process, there is danger that the external public accountants might refrain from being fully critical or objective in their assessment of internal audit performance or findings. This is especially concerning if they believe their contract of payment could be influenced by the very person they need to audit or challenge. Such a structure undermines the assurance framework and could diminish stakeholder trust in the audit process.
To address the issue of conflict of interest, it is recommended that the authority over the engagement, remuneration, and oversight of the external public accountant to be fully assigned to audit committee, not Chief Audit Executive. Chief Audit Executive should not have role in approving or negotiate external audit fees, as this may compromise audit independence. Audit committee should be fully responsible for all decisions related to the appointment and compensation of the external public accountant to preserve objectivity and uphold public confidence in the financial reporting process. Additionally, Chief Audit Executive should report functionally to Audit Committee and report to management only for administrative matters. To support ethical governance, the Charter should mandate independent reviews and allow audit staff to report directly to the Audit Committee if needed. This clear separation of responsibilities support ethical governance, safeguards the independence of both internal and external audit functions, and strengthens overall trust in the assurance framework.
Now I will discuss the second issue identified in the ESP Audit Committee Charter, which is the ambiguity in committee member qualification. According to the Charter, requires that one member of the committees be given the title financial expert, but it fails to define what qualification and experience should be attributed to the field. Now, at first glance, this may seem acceptable, but this ambiguity is a problem since the definition of a financial expert may have significant differences. A financial expert may define as a person with established credentials, that is, a person who has qualified either as a chartered accountant, CA, CPA, ACCA, or one with vast experience in the field of auditing, finance, or financial reporting in professional and regulatory terms. In the absence of the necessary criteria, there are chances of allowing an unqualified person to take the position, and the resultant effect is poor financial control and/or misunderstanding, poor decision-making of financial data, and increased risk of undetected errors or fraud. The committee may not notice the red sign in the financial report or give a weak approval to false information, in the case there are too many non-literate members. This makes governance suffers and expose the reputation and compliance of the company to loss. As a matter of fact, ideally all members of an audit committee should have at least a basic financial literacy as recommended by Best Practice Institute of Internal Auditors and the OECD. This will make all the members active in financial discussion and also be able to challenge the management in case of any. Next, I will pass to the next presenter.
To strengthen the effectiveness of the audit committee, we recommend starting with clear definition of key qualification. A financial expert should have professional certificates such as CPA or CFA, along with the substantial experience in a role involving direct financial oversight. They must also demonstrate a solid understanding of the GAAP and relevant regulatory reporting standard. While financial literate should defining this as having the ability to read and understand the financial statement, evaluate the internal control, grasp basic risk management principle, and establish the definition provide a strong foundation for consistent standard. Next, the recommendation is implementing a structured vetting and selecting process. This will involve thoroughly review resume, conducting interview focuses on the assessment financial knowledge, and checking reference. The goal is to ensure that every appointed member meet the established criteria and bring genuine expertise to the table. In addition, because the financial landscape is constantly evolving, the proposed mandatory ongoing professional development is needed. All the audit committee members should regularly participate in the training related to financial reporting, auditing standard, and emerging risks. This will help them to stay current and capable of identifying the potential issue early. Finally, the recommendation is the audit committee charter should be reviewed and updated regularly, at least once a year. This helps keep the committee aligned with the best practices, regulatory expectations, and any changes in the organization's financial environment.
The third issue is lack in clarity on audit committee's role over the chief audit executive. The evidence shows that on specific duties on audit committees, number 8, stated that the review with the chief audit executive, the scope, staffing, budget, and audit schedule, including plans for review of the corporation electronic data, processing, procedures, and control. This statement is clearly demonstrates the audit committee's current role is primarily focused on scope, staffing, budget, and audit plans. Hence, it does not explicitly the statement of the audit committee's role in the terms of appointment, potential removal, or remunerations of the chief audit executive, which is crucial to ensuring the true independence and accountability. Without clear language, granting the audit committees this authority, the chief audit executive may be accountable to the management rather than the board, which is spreading a conflict of interest. For example, if the chief audit executive discovers significant control weaknesses or fraud involving the senior management, but the management also control the securities of the chief audit executive work and resources, there may be subtle or directly pressure on the chief audit executive to mitigate and detect the critical findings. This risk directly undermines the independence, objectivities, and effectiveness of the internal audit functions, according to the Institute of Internal Auditors, international standards for the professional practices of the internal audit that we call it as IPPS. Furthermore, without clear authorities to remove or replace the chief audit executive, the audit committees has limited ability to act if the chief audit executive performance is poor or if their independence is compromised. This gap is exposed the organization to greater risk of the audit failure, undetected frauds, and the non-compliance with the regulatory expectations.
Now, I want to explain the recommendation for the issue. To address this issue, we recommend adding specific duties under the specific duties section that clearly state the role of audit committee regarding the chief audit executive. The following are 3 additional proposals to this charter. First, regarding the appointment and removal of chief audit executive. Currently, the charter does not explicitly state the audit committee's direct authority over this proposal. So, our recommendation is to clarify that the audit committee is responsible for the appointment and removal of the chief audit executive. Although they should consult with the CEO, The proposal and decision making should lie with the audit committee. This is to ensure that the reporting relationship of the CAE that directly promotes their independence is to the audit committee. Second is about performance evaluation of the Chief Audit Executive. The Charter mentioned that the role of Audit Committee in ensuring the quality of internal audit, but it does not specify the means of oversight for the individuals leading the function. So, our recommendation that the Audit Committee should be clearly responsible for reviewing and approving the annual performance evaluation and be able to link the CAE's accountability performance to the Audit Committee. This ensures that CAE's performance is not assessed solely on operation but on how they provide assurance and insight the board, which is concerned for the auditor. Finally, the responsibility must adding in specific duty is the composition of the Chief Audit Executive and the budget for the Internal Audit Department. The Audit Committee should review and approve the composition to avoid the CAE being controlled by the management they audit. Similarly, the budget should be reviewed by the Audit Committee so that the department has adequate resources in terms of staff, technology, and so on. If resources are lacking, the assurance provided by them will be compromised, thus affecting the ability of Audit Committee to oversee.
In conclusion, the review of the ESP Audit Committee Charter highlights several problems that can affect the audit independence and good governance. These include the Chief Audit Executive Managing Auditor fees, unclear rule about who are qualified as a financial expert, and the Audit Committee not having full control over the Chief Audit Executive. To fix this, the Audit Committee should have clear authority, proper criteria for members, and stronger oversight. These changes will help improve transparency and the overall effectiveness of the audit processes.